Hey, Crystal Vanway here in Phoenix. Yesterday I attended a roundtable presentation put on by the Women's Council of Realtors in which a representative from Bank of America came to talk to us about short sales. And this is a second video that I'm putting together to kind of summarize some of the information that this fellow shared with us. Again, he wasn't exactly from the short sale department. He was sort of a liaison who works at Bank of America as a mortgage loan officer, and very valuable information that he passed on to us. And I thought a great gesture on the part of Bank of America to say, hey, we hear what you're saying and we want to improve. But what I wanted to just summarize in this video were some of the reasons that we were given in the meeting about why short sales are declined. Now, the track record is a lot better this year than it was last year. Last year, maybe 1 in 4 short sales got approved. This year, we're probably looking at about a 50% ratio of short sales that get approved. But honestly, it sounds to me like many of the banks would like to see that number go up. I think they're recognizing that the alternative of foreclosure is just, there's nothing attractive about it. So here are the 5 main reasons why short sales are declining at Bank of America, and I think it's very easy to assume that these same reasons are going to apply to most of the other lending institutions as well. So the first reason is that the offer is not at fair market value and does not represent what they're calling a mitigation of loss relative to an REO sale. Okay, well, what does that mean? What it means is that someone's put in a lowball offer, and if the bank accepts that offer, they're going to lose more money than if they went ahead and did a foreclosure. Now, we all have heard the story that foreclosures cost banks more money than a short sale, but only up until a certain point. I mean, they've got to be able to realize the short sale at something close to fair market value. So that's one of the reasons why the offer is declined, is if it's not at fair market value. Okay, second reason for short sales to be declined is insufficient information to process the transaction. When you submit a short sale package to the bank, it's a pretty hefty package. There's a lot of stuff that they need, a lot of documentation, and if they don't receive all that information, they can't process the short sale. Now, most of the information does come from the seller, and sometimes the sellers are just not willing to cooperate. Whatever the reason is, if they don't have a complete package, then they aren't going to be able to process the transaction and they're going to decline it. Third reason is the transaction is not an arm's length sale, and this is becoming a bigger and bigger issue with some of the let's just call them people who are taking advantage of the situation for their own benefit. If you are doing a short sale, you can't benefit from that in any way, shape, or form. That's the bank's policy. So let's just say, for example, your parents buy the house that you're going to lose to foreclosure. They buy it at a short sale at a greatly reduced price, and then they just let you live in it, or you buy it back from them for $1, or whatever the situation is. That is definitely not an arm's length transaction. What if an investor buys your house and sells it back to you? Not an arm's length transaction. Basically, they want the parties who are involved in the short sale to have no relationship to each other whatsoever. And if that's not the case, most times they won't approve the short sale. There are exceptions to that, and so the advice that this fellow is giving, and I have to agree wholeheartedly, is that you need to disclose everything when you are submitting your short sale request to the bank. Disclose everything, and if the circumstances warrant it, they may consider certain circumstances warrant a non-arm's length transaction sale. Okay, fourth reason, the investor, the insurer, like the mortgage insurance provider, or the subordinate lien holder will not approve the sale and accept the loss. So there's a couple parties in some of these mortgages, and they all have to agree that the short sale benefits them. The investor, of course, who's putting the money up originally, the mortgage insurance provider, who's going to be paying a claim to the lending institution that's realizing a loss from the sale, and then if you've got a second lien holder, like a second mortgage or even a third lien holder, they also have to agree to accept some kind of payoff conditions so that they can approve the sale. If they don't, then the sale can't go through. And then the last reason that BofA is giving for short sales being declined is if the homeowner will not contribute to the loss or sign a promissory note if required. Now, this is really kind of a gray area, kind of a real controversial area. Here in Arizona, we're a non-deficiency state. In other words, if you lose your home to foreclosure, then the bank can't come after you for the deficiency. In a short sale, the language in the approval letter needs to reflect that, or it's really not to the homeowner's benefit to go short sale. They're not protected from a deficiency claim by the lending institution. So if the bank comes to them and it's purchase money, in other words, the loan we're talking about short selling here was used to purchase the home and they didn't take cash out, and the bank comes to them and says, hey, we want you to sign a promissory note for $5,000, $10,000. If the homeowner won't sign it, the bank may cancel the deal. That's, it's very much case dependent, and that's one that's got a lot of can of worms kind of situation there. But that is the fifth reason for the short sale being declined, is if they can't come to terms as far as the seller's contribution to the deal. So that's it. Those are 5 things to look for. These are not straightforward, trivial transactions by any means. So whenever you're looking at doing a short sale, if you're the seller and you're looking at doing a short sale, it is highly, highly, highly recommended that you seek the counsel of a real estate attorney and or a tax expert, such as a CPA, to find out if it will benefit you or not. So if you have any questions or comments, I sure would like to hear them. Shoot me an email at kristen@hereinphoenix.com or send me a comment in the comment box below, and make it a great day.